But let's talk about banks and how their earnings have been. Let's welcome on board Ashutosh Khajuria, the ED and CFO at Federal Bank, joining in on the show right now. Ashutosh, hi, morning. Q1 was a very strong quarter on credit growth, moratorium coming down, NI as well improving. Do you sense this kind of growth will continue into the next quarter as well?
See, I think there are lots of uncertainties associated with the COVID. So I think giving even a range of growth numbers would not be correct on my part, because as the things move, we would look at it. But I think the momentum that had been there for almost last, 3 years plus, which got slowed down sometimes and say between Q2 and Q3 of last year, has been, it's gradually, changing the gears, and certain segments within the, loan book are really showing traction. And when I say certain segments, I definitely would like to name gold loan particularly. Gold loans are doing well for our bank. And you would have seen in the fourth quarter of the previous financial year, in the first quarter of this financial year, the growth had been quite respectable. When I say respectable, I think it's 30%, closer to 30% YOY. So I think, gold loan should continue at least for another 2 to 3 quarters with almost same pace. There are certain segments where the growth has not happened as was the momentum, in the earlier years or so, and particularly the corporate side and all. But that had been partly because of the choice bank has been making to move from more of retail from wholesale. So business banking is one area. Similarly, retail is another area where growth is coming, in addition to the gold loan growth.
Sure. In particular, when I look at the margins, Ashutosh, are enhanced margins more a function of lower cost of funds for you this quarter, sector-wise, that is, or do you think it's more about operating efficiencies that you actually incurred in the quarter gone by? And if the reverse repo rate is cut again, will you have even better margin capabilities going forward?
See, I think one particular thing needs to be understood well, that the pricing of liabilities, as you said, cost of funds, doesn't suddenly change for banks because of the composition of liabilities that Indian banks have. We have nearly 90% of our resources coming from public deposits. And a good chunk of it, almost 2/3 of that, is in the form of term deposits. So you are logged for a particular period. It could be 1 year, it could be 3 years or so. So when the rates are cut, they do not immediately result in a reduced cost of funds in the same proportion. Though the marginal growth definitely comes at a lower cost, but you have a stock. So that's one part. And on the other hand, when the rates are cut, your advances portfolio, loans portfolio immediately gets repriced with your cutting of MCLR or even any other benchmark, because if you're going in for, say, repo linked rates and all, then also, with policy rate cut, you suddenly have the impact, immediate effect on your, yields on advances. So I think, going by these two, variables, I would say it's more of the operational efficiency that has brought the margins up. It's not only a reduction in cost of deposits or cost of funds, because you have the reduction in yield of advances also matching them. So yes, there had been operational efficiency, and that is showing in the control over operating expenses. So OPEX, if you see in first quarter, you would notice the change.
Ashutosh, how should one go about understanding moratorium? Every bank has used a different criteria. And I was looking at somebody like SBI, the moratorium is below 10%. If I look at ICICI Bank, the moratorium is about 17-18%. So why is there such a large divergence between all the banks? I mean, the divergence is not 1 or 2%, the divergence is 50 to 100%.
So basically, all are operating in a similar environment, and theoretically, there should not have been a major difference between the two banks. I mean, you can't suddenly have so different portfolio amongst the banks. So I think it's the definition which is not standard, and it is the definition which is been taken by each bank, which is playing its role. So you have some banks saying, if two installments out of four have been paid, so I'll take it out of moratorium. Why I'm saying four? Because from March the moratorium started. So March, April, May, and June. So till Q1, there were 4 installments to be paid. If you take July also, then 5 installments. There are some banks who are just taking 2 installments being paid, means you are outside, out of moratorium and all. There are some banks, like we have very clearly defined in our investor presentation, that we have taken only those accounts, and that too not of the out of the gross moratorium. We still say, because as long as they are flagged as the accounts having granted moratorium, we would continue to take them, carry them till the customer itself, decides, to opt out, or the period of moratorium is over. But we have come out with another number called net moratorium, wherein we have very clearly defined that those accounts where all the installments have an interest has been serviced till June, they may still be flagged as moratorium because they have not, formally opted out of moratorium. These accounts we have taken out. So you would have seen our number in investor presentation that comes to net moratorium is closer to 24%. But when I say 24%, these are the accounts where which are zero DPD as on 30th June. So, I mean, even if there had not been any moratorium, there had not been any, status freeze or something like that. Even if there is no status freeze and all, still they are zero DPD as on 30th June. But they have probably, to have a backup of liquidity available with them, they have opted to be a part of, the offered moratorium. So I think the definition changes from bank to bank, and accordingly the numbers are changing. Otherwise, I think we all are operating in a similar environment, particularly for banks who are, mainly domestic in their operations, and they do not have too much of overseas operations. There should, it should not be so different for one bank from another, because ultimately the portfolio is more or less same. It could be a little bit here and there and all. Choice of the composition of the loan book and all, but it can't be, so materially different. Than one group would have, more than 20%, and the other group would have less than 10%.
I'm so glad you've so openly addressed it, that if the turf is the same, then the same rules they should apply to everybody, which in a sense created confusion for all of us. Okay, before we wrap, here's a question which in a sense was a concern a couple of months ago. It came on also while we were doing various shows and speaking to some of your analysts, and the question was, there is going to be a challenge in Middle East. There are job losses which are happening because the oil economy in the sense has slowed down. Federal Bank does serve a lot of NRIs, and especially a lot of NRIs based out of Kerala who have one family member who lives in Dubai and is sending or repatriating funds back. What happens to this very large differentiated audience which you have, which historically has been an advantage for you? Could that be a concern there now?
Nikunj, I think I would put it differently. Bank has witnessed lots of such upheavals in the past in Gulf. We had the first Gulf War, christened as mother of all wars, when Kuwait was occupied, and we had a fairly good chunk of remittances flowing both from Iraq as well as from Kuwait at the time. And then we saw the oil prices going down, going up. So one end had been closer to $25 per barrel, or even below that. And on the other end, we had $147 sometimes in 2008, July 2008 and all. But there had been not a material difference as far as the flows are concerned. Then you had NITA cut, localization and all. That also came back. You had MERS, MERS, you had SARS, all sorts of, episodes happened, which predicted that there would be a huge impact on remittances flowing into Kerala. I don't want to, be prophetic here and make some, predictions and all. But I think what we found, and the pattern is there, that whenever such challenges are there, first the flows increase. Normally, the people, who are earning their livelihood there in, Gulf countries do not have the citizenship there. They may have the permanent residency, but they do not have citizenship. And as a result of that, there is a movement of remittances into India, into Kerala initially, and thereafter they take a call and they just decide what's there in the future. And fortunately, there had been a reversal of those challenges that had come. So I think, and another thing which needs to be understood well, that immigrants from Kerala and all had been in that geography since early 70s, the first wave. And now their second generation and sometimes third generation is working there, some in an entrepreneurial role and all. So they are slightly different from the group that comes from, say, Bihar or Eastern Uttar Pradesh or Chhattisgarh, Jharkhand and all that, wherein, there had been an upward movement as far as affluence is concerned, as far as the nature of job is concerned and all. So as a result of that, they are more permanent than those where the fear of or apprehension of job losses is being talked about. But still, I'm not ruling out anything. So there is a possibility that some may decide to live that, leave that geography, for good and start their own in Kerala. I'm not ruling that out. But I think it's too early to really write an obituary about NRI remittances and all that. Because we have seen in the past in at least 5-6 such episodes where every time after the episode, the flow had increased, the remittances have increased. So, when I'm speaking to you till 31st July and all, we have not seen any reduction in flows or so. In fact, when we compare it vis-a-vis same period, April to July last year, we would be at least, 20-25% higher vis-a-vis last year.
All right, Ashutosh, really appreciate your time. Thank you for joining us. You've really frankly and patiently addressed all our questions. Let's take a break. When we come back, well, it's a Raksha Bandhan special. Well, a brother and a sister duo. I didn't know they were brother and sister till about a couple of years ago. Well, that's Zia Modi and our good old Hormoz of Autocar. How are they planning to celebrate Rakhi, which is a special day for this, for the brother-sister bond?